Hello, everybody. My name is Andrei Burz-Pînzaru. I'm a partner in Deloitte, and I'm also leading the Deloitte Legal FSI services in Central Europe. I'm delighted to be welcoming you today here for the sixth day of the Deloitte Banking Risk and Regulatory Academy, the sixth edition. That's a fortunate, I would say, coincidence. We are gonna close the week of the Deloitte Risk and Regulatory Academy of this year with a session which is very interesting for many of us, fact proven also by the audience that we have today, namely the way forward and the innovation when it comes to payments, and including a hot topic or an increasingly hotter topic, which is the digital euro. Before jumping into or diving into the presentation, let me just remind you certain, let's say, house rules for you to take good advantage of the session today. Namely, if you have questions, feel free to ask them and type them into the Q&A box. We have time booked at the end for answering as many as possible of your questions. We will run certain polls just to take the pulse of the market, let's say. You can, and we encourage you strongly to participate in the polls by clicking on the answer option that fits your preference on the screen. Polls are anonymous, yeah, and we will show the results just statistically. You can use the chat for the hellos, reactions, and technical issues. This will be monitored and responded. And just note, this session is recorded, and the recording will be accessible later via our portal. We can now move towards our presenters. I've already mentioned my name. I'm here together with colleagues from both Eastern and Western Europe. We will be speaking jointly with Csomor, which is a director in Central Europe. Hi, Csaba. And we also have with us Verena Römelmeier from Deloitte, Germany, and Johannes Leive-Kilp, also from Deloitte, Germany. Hello, Verena. Hello, Johannes. Good. We can now advance to the next slide, please, and start the discussion about payments as of today. What you see in front of you is just a broad description of the bigger regulatory framework that is put in place by European Commission, aiming to deal with what I would call unprecedented advances in payments. And, well, I would say it goes definitely beyond payments because it touches also monetary system. It touches also the financial markets broadly. From the various initiatives that you're seeing on the screen, some of them are focused, as we say, inside, namely on, inside the industry, consumer protection, payment security, licensing part. But others are meant to actually increase the interconnection of the ecosystem, whether we're speaking about FIDA or the European Digital Identity Wallet, as well as Digital Euro Package, and last but maybe not least, MiCA. In terms of timing, when we speak about the PSD3 and PSR, which we're going to start with, I would say expected timing for this is PSR rather faster, simply because it's a regulation. So once enacted, it does not require national transposition. It might be this year. We'll see. When you speak about PSD3, Payment Services Directive 3, revisited, that yet first has to be adopted, published, and then there will be a period for transposition. So it's not like immediately going live. We can now move forward. The way we look into this, we think that one should zoom out and not look into PSD3, PSR alone. The regulators are obviously driving the legislation to move from, let's say, compliance, without giving up on compliance, definitely, but to move from compliance to more of what is called a data-driven financial system. And while PSD3 and PSR are just building upon the existing PSD2, which opened the payment ecosystem. FIDA, if and when, will come, that's still negotiated to my knowledge, will actually signify the movement from what I would call open banking, or maybe should have been better called open payments, to open finance. But we'll touch a bit briefly on this one. PSD3 essentially is just aiming to improve the PSD2, the Payment Service Directive 2 framework. Is not a revolution, as was said. It's just an improvement. The PSD2 principles are maintained. But it aims to improve the access of PSPs to bank accounts. There will be very limited options for banks to deny account services for PSPs. And it also aims to merge the existing different yet very similar payment institutions and e-money institutions framework. Last but not least, there is a further enablement of access of PIs at settlement systems. When we speak about PSR, the Payment Services Regulation, it is a regulation especially because it wants to avoid arbitrage, regulatory arbitrage between countries. As we all know, directives can allow home member states to come up with some local original takes. A regulation is a regulation. It applies as is. Yeah. It goes into expanding on the current SCA, the current strong customer authentication regime, to secure, or at least to provide the framework for better fraud prevention, and also imposes the obligations for payment account providers to provide certain standardized dedicated interfaces to meet specific functionality and performance requirements. Last but not least, we will have to provide to the users a dashboard where they can see and select or opt out for the third-party payment service providers which we're given access to. We can now advance FIDA, just briefly touching on FIDA because it makes part of this whole ecosystem. FIDA is definitely in a more incipient stage versus PSD3 and PSR. It will essentially, while PSD2 aim to liberalize, let's say, payments, FIDA would liberalize data about financial services. And FIDA essentially creates the framework for sharing financial data way beyond bank accounts, which was possible under PSD2. It essentially touches pretty much the entire financial ecosystem from banks, payment institutions, EMIs, investment firms, crypto asset service providers, fund managers, pensions, insurance, you name it. The core principle of FIDA is that the client is in control of data. So the data sharing has always been made at the initiative of customer. But the key point is it cannot be denied, which again means that the banks, for example, but not just banks, everybody concerned will have to invest in technology to make possible this real-time data transfer, and will obviously have to take business decisions whether should this be dealt with, like I believe to a large extent PSD2 was dealt with at its time, which was mostly a compliance issue and a cost by the banks, or positioning vis-a-vis FIDA, we believe it should be more a business approach beyond compliance and building up business cases about that. Can now further move on. Another element that is brought by PSD3 PSR is the licensing framework. The concept is to harmonize the licensing framework both between EMI and PIs, but also, I would say, at European level. We have express introduction in the licensing process of the full DORA compliance, which in practice a number of member states, regulators, NCAs already did for the current ongoing licensing process for such entities, but now we'll have this clearly done at European level. And the entities will also have to consider going to a quasi-reauthorization process under PSD3. Moving on. Few elements of other elements of novelty. The rules about customer funds safeguarding are enhanced under the new regulations. We have also the possibility provided to safeguard the funds at central banks, provided that the central bank, accept that. Also requirements to diversify safeguarding, and as we all are used with, EBA is developing RTSs on safeguarding risk management. Interestingly, maybe independent ATM deployers, which up to now did not have any licensing requirement per se for cash withdrawal services, will now have to go through a registration obligation. It's called registration, but frankly, the documentation they have to file, it's quite similar with what you would have to file for an authorization process. So it's not, I wouldn't call it a light registration. We can now move on. Interestingly enough, even though MiCA is marketing crypto asset regulation is a relatively new piece of legislation at European level, it started to create interplays with other regulations very early. Namely by reference to interplay between the entities which are or will be allowed to act as crypto asset service providers under MiCA. There was a question raised by reference to e-money tokens, whether for managing or transferring e-money tokens on behalf of clients, will they need to have a payment institution license? And the answer is that I think the regulators for now have been a bit puzzled about it. We have a no action letter by EBA, but the way it goes, it's looking like either we will have an enlargement of what MiCA does to cover requirements for this kind of service providers similar with those for payment service providers, or for the CASPs to, as they are called, to be required to also have a payment institution license. I mean, there are arguments at both ends in doing that. We'll see how this will evolve, but it is relevant, as I said, that there is a new kid on the block when it comes to payments, which are the e-money tokens issued under marketing crypto asset regulation. Notably, this is new kid on the block from a technology perspective, because for those of you familiar with the e-money directive, which is not a new piece of legislation, this was somewhat envisaged, because in the preamble of the e-money directive, it was clearly said that e-money are e-money irrespective of the technology used. So the directive is technology agnostic, which means European or stable coins in Europe, if they are one fiat-backed stable coins, should have always been viewed as e-money. Now, marketing crypto asset regulation came with a solution to that, and basically said, well, yes, the e-money directive does apply to this kind of stable coins, but additional obligations and rules under marketing crypto asset regulations apply to them. On this note, I'm getting to the end of my intervention. My request now to our colleagues is to put on screen the poll related to the market readiness for PSD. The question is, how would you assess your institution's awareness and readiness for PSD3 PSR? And you have three options. The request is to obviously pick whichever one, actually, which is, you believe is representative for the entity that you represent. As I said, the answers are fully anonymous, and we're also gonna show on screen the statistical results. We have about one minute for the answer to these questions. So no rush, but don't let it linger too long either. And as I said, it's going to be interesting from my perspective, at least, to see whether this liberalization of the payment services market going forward, is it going to be viewed more by the banks as a compliance burden imposed by the regulators, or we will see more and more a shift towards building a business case around it. Thank you. Okay, so we have the results on screen. It looks like the majority of the audience is in intermediary phase, or started exploring the implications. Yeah, there's still a significant percentage, I would say, that it's still very early in the process, and we have an 11% which already are very familiar with the topic and have designed a plan. Thank you for the answers. I think they give us a good perspective in terms of where is the market. I now hand over the microphone, so to say, to Csaba.
Thank you very much. Good morning, everyone. My name is Csomor. I'm the head of blockchain and digital assets, or briefly spoken, crypto in Deloitte Central Europe. And I would like to talk about stable coins, as implied by Andrei. But I think let's put on the poll for this part as well, because based on the first section, we see that most of the audience is actually in the intermediate level, medium level. Would be very important to see how you see stable coins, e-money tokens, where you stand with them. Not much awareness, medium exploring, or you already have a plan and you're actively going ahead, so to say, in the crypto space, because stable coins are the first layer of the crypto space. So please provide your answers, and then we can see where we start from. What we see in the meantime with clients we are talking to, actually globally. So Deloitte Blockchain and Digital Assets is not surprisingly led out of the US. We have the global Center of Excellence is in Los Angeles, and also New York and San Francisco. And our EMEA center is, of course, in London. So we are cooperating quite actively globally, and we are talking really and serving clients globally. And what we see is, for example, 1 year ago and to now, so there was a huge change during the last year on how banks and traditional finance players are approaching the stablecoin and crypto topic. Okay, so yeah, this might be something we've have expected. Yes, most of them are just some awareness. Some started something, but at an advanced level, a little piece of the market is currently, but it's evolving quite fast. So let's jump into the topic. And first, we would like to just show you a video, which is actually from the chair of the US SEC, what Paul Atkins is saying about this.
Today, I should like to discuss what Commissioner Peirce, Hester Peirce, and I are calling Project Crypto, which will be the SEC's North Star in aiding President Trump in his historic efforts to make America the crypto capital of the world. The SEC will not stand idly by and watch innovations develop overseas while our capital markets remain stagnant. We're at the threshold of a new era in the history of our markets. As I mentioned earlier, today I'm announcing the launch of Project Crypto, a commission-wide initiative to modernize the securities rules and regulations to enable America's financial markets to move on-chain. The President's Working Group on Digital Asset Markets released the PWG report with clear recommendations for the SEC and other federal agencies to build a framework to maintain U.S. dominance in crypto asset markets. This report is the blueprint to make America first in blockchain and crypto technology. We will not watch from the sidelines. We will lead, we will build, and we will ensure that the next chapter of financial innovation is written right here in America.
Thank you. So I just want to watch this video to really give a hint that it's really a technology which can be used. So because crypto originally has very, so to say, interesting or various connotations. I don't know, money laundering, fake internet money, meme coins, NFTs, of course, that's also there. But if someone would like to understand what is really crypto and what is blockchain, fundamentally it's a technology. It's the next layer of the internet. This is the financial internet where we can actually put all the value of the world, not only the money markets and capital markets, but actually all the assets, including real estate and infrastructure and all the assets, all the wealths actually currently stored on Earth, actually in Web2 systems or local systems, so that it can be stored on the blockchain. So we will talk about stable coins because actually that's the tip of the tokenization iceberg, because tokenize meaning put an asset on the blockchain very easily. So if you're hearing that it's tokenization, it's very easily put an asset on the blockchain and you get a token. That's why it's called tokenization, which is representing your ownership of that given asset on the blockchain. So once you have the token, that's representing your ownership of that given asset on the global decentralized ledger of the blockchain. And if you go down, of course, you can tokenize deposits. So, for example, Europe is mostly moving, or the EU is mostly moving towards stable coins, but the competitor is tokenized banking deposits. The UK is actually mostly moving, it seems, the UK banks mostly moving towards tokenized deposits, but you can only also tokenize money market funds. Franklin Templeton did this, BlackRock did this. So actually, all the majors managers of the world already did their own money market tokenized fund. And the next step is tokenized equities, tokenized real estate, tokenized infrastructure, and everything. So everything can be tokenized. So simply put on the blockchain. So let's go with stable coins. Stablecoin volume actually surpassed in the last year settlement volume, Visa and MasterCard settlement volumes altogether. So up you can see that it was around $10 trillion dollars in case of MasterCard, 16 in case of Visa, so 26 altogether. And down there you can see it was actually 27 in case of stable coins. The largest two stable coins are, first, the largest one is Tether, USDT, and there is Circle, USDC. Actually, Tether is not MiCA compliant, so you cannot use Tether now anymore in the EU, but we can use Circle. And actually, Circle is also listed on the Nasdaq, the US stock exchange. And actually, by the way, Deloitte is the auditor of them. So Deloitte is auditing the largest listed stablecoin issuer of the world, which is Circle. And if you're going to the crypto native, so to say, for example, Coinbase, no, just this slide. So Coinbase, Kraken, Gemini, those are the largest crypto exchanges on the world, crypto natives. So they grew up with crypto. Their original business is crypto. And what we are seeing is that as crypto and of course also trading, but mostly investing, long-term crypto investing is becoming more and more relevant all over the world. The banks are seeing that there is client need and interest and demand to invest in crypto, trade crypto, but also invest in crypto. And what we see currently is that most banks are moving towards to be able to have crypto trading and custody services to their clients. But staying at the stablecoin topic, it seems that it's really coming to financial mainstream because it has very important advantages relative to the traditional financial system, which I will go into later. But for example, Societe Generale is a huge bank. They already issued Coinvertible maybe 2 years ago. That's a euro stable coin. So they have their own stable coin. And recently they issued their own USD stable coin because globally, mostly, of course, not surprisingly, again, the stable coin market is dominated by USD. Actually, and now Europe has efforts to change it and change it and also promote the euro denominated stable coins. If we go to the next slide, here you can see, so there are two large stablecoin consortia announced again a couple of months ago globally. In the top left, you can see Kivalis. Kivalis is grouping actually 12 European banks, leading European banks, as you can see. So BNP Paribas, UniCredit, KBC, Raiffeisen, and so on. So it's a very high pedigree group. And they are planning to launch a euro stable coin. Kivalis is technically headquartered in the Netherlands, and they are actively working to issue together their euro stable coin. And on the bottom right, you can see Faro. That's the other stablecoin consortium. It's actually global. So they are mostly planning a USD stablecoin or maybe some kind of mixture linked to the G4 currencies. But it also beholds huge names. So Goldman Sachs, Bank of America, Citi from America, but also from Europe, they have Santander, Barclays, UBS, so Deutsche Bank, huge names. So actually, what we see when we are working with clients and doing crypto projects in the market, and also based on the news which are popping up publicly, actually now everyone is moving towards stable coins because it's actually now a must-have. It's not a nice to have, but it seems to be a must-have. And why it's a must-have is if we go to the next slide. So again, it's about the definitions. I wouldn't deal that much time with this because Andrei told about this. I already mentioned this. So yes, stable coins are actually tokenized e-money. That's why they are called in MiCA. So the MiCA regulation is okay. Just a message. It's tokenized e-money actually. That's why they are called in under MiCA EMT, so e-money tokens. And also there are the asset reference tokens. So e-money token is when you have something, and they are called actually stable coins. Why? Because they are not created to have any volatility, for example, like Bitcoin or Ethereum. They are actually only the gate between the fiat world and the crypto world. Because with your fiat dollars and euros, you cannot go to the blockchain and buy Ethereum or Bitcoin because that's already on the blockchain. So you need to have a gate. So first you need to convert your fiat dollars to crypto dollars. That's a USD circle. And once you have the USD circle, with that on the blockchain, you can buy asset reference tokens, for example, Bitcoin and Ethereum, who are referenced to some kind of asset who has, of course, an intrinsic value and which is volatile. So asset reference tokens have a volatility because the referenced asset is volatile. It's actually priced based on the market all day long based on their fundamental value, just like stocks. But if you have a stable coin, it's just the intention to have a stable coin, a stable dollar or stable euro, which is not fiat anymore, but it's already on the blockchain. Let's go to the next slide, please. And actually, the last slide, as per content, I wouldn't like to go that much details. Of course, happy to discuss later. The legacy system and stable coins. The most important difference is the first part is actually availability. So actually, you can do business in the traditional world. It's called actually TradFi in the crypto language. So there is TradFi and there is so-called DeFi or a crypto world. When banks are open, of course, there are the opening hours, there are the weekends, and also there are the geographical mismatches. So maybe one bank is open in Europe at the time, but it's not open in Asia or America. So you really need to match those availability, which is in case of blockchain, it's 24/7, 365. So it's a programmed ledger based on smart contracts. And smart contracts doesn't need to be open. You don't need to have people there and actually switch on the systems. Smart contracts on a blockchain are working because they are just code. So you write the code, you release the code, and that's working 24/7 and 365. So you are using the code and not intermediaries who needs to be open. The next one is the speed. When you're doing a stablecoin transaction on chain, it's actually extremely fast. When you're doing a transaction again in the TradFi world, it can take 1-3 days. Again, coming back to availability and so on, and many systems all over the world need to communicate with them, with each other. So many centralized systems, centralized local systems need to communicate with each other so that you can actually transfer your value, whether if it's cash, so it's just cash, or any more complex value. The more complex the asset comes, for example, you don't want to just transfer cash, but it's already a deposit, or it's already a money market fund, or it's already a stock, or it's already a derivative position, or maybe some commodity. It's getting more and more complex, more and more long, more and more costly. So for example, if you, I don't know, would like to move your gold, that's one of the extremes. It's extremely costly and time consuming to move a material amount of gold. And also, if you don't want to move it either, you need to store it. That's really costly again. In the blockchain, it's near instant. So those three blockchains are Bitcoin, the largest one. Those are not used really to do this. That's digital gold. Bitcoin is not a quick system, relatively slow. That's the digital gold narrative. It's anyone's decision to decide if they believe it or not. But actually, what the two other large blockchains, the second largest is Ethereum, and the third is Solana. Ethereum is called the Wall Street chain or the Wall Street 2.0. So actually, all the Wall Street giants, BlackRock, Fidelity, and all the big banks are building mostly on Ethereum, and that's the so-called institutional chain. So that's a high security, high robustness, but it's a bit more expensive and a bit slower. Of course, not relative to the traditional financial system, but for example, relative to Solana. And Solana is mostly called a retail chain. It's faster, cheaper. It doesn't have that much security as Ethereum, but actually, when you are doing a retail transaction, I don't know, I'm sending $300 or I don't know, $1,000 to anyone during the weekend. I do it on Solana because it's quicker, cheaper, and I don't need, it's of course secure, but it's not a robust security as Ethereum. But for example, when BlackRock is sending to JP Morgan, I don't know, $100 billion in money market fund. Of course, the most important for them is security, and they are open to wait a bit long and pay a bit higher fees, but security is the most important for them. Cost, we discussed the traditional financial system because many centralized systems need to communicate with each other. So many middlemen, which they, of course, they are doing a job when they need to transfer money or value. They are doing a job. For that job, they ask for fees. But when it's smart contract on the blockchain, it's automatic. The code is just cheaper than making all the intermediaries and middlemen work all over the world. Tracking, again, coming back to the delocalization and centralization and globalization and decentralization. On the decentralized ledger, everything is transparent, and there are very good blockchain analysis firms. For example, Chainalysis and so on. With Chainalysis, by the way, Deloitte has a global strategic alliance. So on the blockchain, you can analyze everything, of course, and on the centralized systems, you need the access and so on. So the transparency is higher on the global ledger. Programmability, we discussed smart contracts. You just write a code and it runs by itself. You don't need actually people to work and be open systems. And the infrastructure dependent is when you again coming to when you need to align multiple centralized ledgers all over the world. It's not easy to make them communicate efficiently with each other. But on the blockchain, you can also do it one thing in one chain, but in many chains, for example, as I mentioned already, Ethereum and Solana. And if you would like to bridge something, do something between chain, cross chain, so between Ethereum and Solana, you can also do that via the so-called oracles. So you can move across chains quite quickly and quite efficiently. And that would be all. I think the last slide is about the Deloitte Hub, what we generally support, generally provide to clients when they would like to move forward a stablecoin strategy or do anything with stablecoins. Of course, it's a huge chunk of planning and work. I would like to go into the details. I just want to mention at the end, this is my last slide, that in many cases we are actively supporting global and European clients during their stablecoin journey. Thank you very much.
Thank you very much, Csaba. So just transitioning to the next topic, one remark by reference to Csaba's presentation. In terms, when we speak about e-money tokens, make no mistake, they can, they're heavily regulated. So what we would call MiCAR compliant, so European legally compliant stablecoins, are e-money tokens which can only be issued by credit institutions and e-money institutions. Yeah. So let's not mistake them with stable coins issued outside the European regulatory perimeter that might not meet that criteria. And also one last remark in mind on this, the logic of the discussion here is again focused on payments, but payments in a broader sense, that transfer of value from point A to point B. Yeah. So we're not talking here about investments, and I know that some people do not even consider it to be an investment, but we're not talking about trading of crypto assets. That is a different topic, which is covered by marketing crypto asset regulation. We're talking about blockchain as payment rails. Yeah. So that's that's the idea. And we're now going to move to, I would say, the next level of innovation when it comes to money. Yeah. I'm talking about the Digital Euro project, and I transition here the microphone to Verena and Johannes.
Yeah, thank you very much, Andrei, and thank you very much, Csaba, for the interesting introduction to the topic of stablecoins. Yeah, thank you very much for having us and giving us the opportunity to introduce the topic of digital euro to all of you. I will start, and then I will hand over to my colleague Verena a few slides later. Andrei, as you stated earlier, we also prepared a poll question. We would like to start off with this poll question about the sentiment regarding the digital euro, because it would be very interesting to find out what your opinion about the digital euro is. If you're somewhat favorable to regarding the digital euro or somewhat opposed. Because in our experience, this can vary heavily from institution to institution. So, yeah, kind of interesting. Also, kind of interested in what your sentiment about the digital euro is. This also can depend on if the question is answered by a bank, by PSPs, fintechs, or technology providers for banks, because every institution, every actor here in this space has their own perspective on this topic. So, yeah, kind of interesting. Okay, great. I mean, the majority answered the poll question with very favorable or somewhat favorable. But there are still a few who are a little bit skeptical regarding the digital euro, which is very understandable because there are still topics open or that remain open. But yeah, I mean, let's start with the presentation about the digital euro. So, in general, we are currently facing a fundamental transformation of our European payment landscape regarding both central bank money and private money, with implications that will influence kind of every part of the industry in general. Today's money is being supplemented and in some cases challenged by the digital equivalents. For example, for cash and the physical euro, this will be supplemented by the retail CBDC, so to speak, the digital euro for which will be used in daily transactions and point of sale transactions. Central bank balances of banks will be supplemented by a wholesale CBDC for the purpose of interbank settlement and large value transactions. And as Csaba introduced, private money like bank deposits will be supplemented by private money tokens like stablecoins, tokenized deposits, or e-money tokens. And thank you, Csaba, for introducing this topic earlier in your part about stablecoins. I mean, why this matters for banks? Because these aren't just additions to the systems, they represent partially a fundamental change. For example, the topics about the CBDCs are redrawing the boundaries between central bank money and commercial bank money. If we move on to the next slide, we can talk about what the digital euro is and why and what the benefits are. The digital euro will be a new method for euro payments that will rely on a strong partnership between the euro system and the private sector. So this means that the digital euro is not a solo act by the ECB or not even by the euro system. So the private sector will be involved quite heavily. On the one hand, the euro system will cover backend operations. It will monitor and operate the core infrastructure. For example, by providing the digital euro service platform, the so-called DESP with this acronym, and it will provide core services and dedicated cash accounts in the backend systems. On the other side, the private sector will provide customers with customer-facing services and will focus on private access and providing access to the digital euro system, and also by initiating payment transactions and handing over to the euro system. But the question still remains open: why do we need the digital euro? I mean, it's from ECB perspective, it's quite clear a pan-European payment infrastructure available in the whole euro area would reduce the risks coming from foreign payment providers and foreign payment infrastructure providers, and risk posed by new types of currencies like crypto and private currencies and e-money. But there are other benefits. The European payment landscape is traditionally very fragmented, which is kind of obvious because looking at our history of independent nations, with almost half of countries having an independent domestic payment scheme, but there are other countries that don't have domestic schemes and they are strongly dependent on foreign technology providers. And this then leads to a high fragmentation of the European system, and of course, then leads to frictions and high costs. If we look at the ECB timeline, the ECB has been working on the digital euro for several years now. In the beginning, it wasn't really clear if the digital euro would be built on a distributed ledger technology or on traditional infrastructure. So they conducted various studies and conducted a market consultation whether that technology would be based on or would be based on DLT or other infrastructure. But we are currently in the preparation phase part 2, and the preparation phase began in November 2023 and was successfully concluded. The focus now is on ensuring technical readiness for the first issuance and also preparing the foundation for the pilot phase, which will start next year. But parallelly, the Council and the European Parliament are not holding still. They are driving forward the legislative process, and official sources state that if the EU lawmakers adopt the regulation in the course of 2026, the digital euro could be issued during 2029. But this isn't really sure for right now. We discovered that the digital euro will need a close collaboration between central banks and the private sector, but there are more actors involved in general, and all of them contribute to the success of the digital euro. As stated before, central banks provide the basic sets of functions and operate the system in the background. Banks, PSPs, fintechs, but not to forget the technology providers for banks are creating the gateway for consumers, for end consumers, to the world of the digital euro by offering wallet services and user interfaces. But in the end, without users and the whole system does not really fulfill its purpose. So consumers and retailers also play a fundamental part in the system, and the digital euro has to offer a good user experience. However, the main effort, in our opinion, for implementing the digital euro will have to be made by banks and PSPs. Next year, as I said, the pilot of the digital euro will start. So the ECB has already decided on the main aspects of the digital euro and how it will look like. But there are also topics that are still open. The first aspect is the wallet I want to mention. There will be a euro app and also a user interface for the digital euro by the ECB, but also banks will have the possibility to build their own apps. Although banks will have to offer the they have to offer the basic functions of the apps, but they don't necessarily have to build their own apps. So what remains open is the depth of the integration, and whether they want to build their own apps, whether they integrate it into their existing banking apps, and so on. Offline payments are an integral part of the digital euro, and this functionality will be implemented. But it is unclear, for example, what will happen if a device gets lost. If you lose your physical wallet, your physical euros will be gone too. Another point is how the offline functionality will be implemented technically. So whether it's based on secure element or a software-based solution. Regarding value-added services, there won't be any form of programmable money with the digital euro, so the government won't be able to ban any kind of transaction. But so there is a big opportunity for banks and other payment service providers to find value-added services, which have to be compliant, of course, and this remains open. The last aspect I want to go into is how the system will be embedded in existing payment landscapes. because we know that there are other initiatives like Vero. So how will these systems fit together? This is not really clear for at least at the moment, but there have to be the right incentives and the right pricing mechanisms for consumers, for merchants, for retailers in order to be a success, a European success. And now I would like to hand over to my colleague Verena.
Thanks. Having learned about the Digital Euro project and the current situation, it is time to take a closer look how it will impact the banking sector. There are three main aspects that I would like to talk about now. The first one is the impact on the business models. The Digital Euro, it will establish a cost-effective public payment infrastructure, which will give the end users more choices in payment options. But unfortunately for banks, this means that the monetization possibilities, they are very limited, as the Digital Euro will be free of charge for the individual users. So that's why the value creation will be shifting towards services and data, for example, for creating new value-added services that can be monetized. And also there are concerns in the market regarding the deposit risks, but there are measures in place that will limit this risk at least a little bit. For example, the setting of a holding limit that will be in place, and that there will be no interests paid on Digital Euro holdings. In terms of customer relations, can we please switch back? Thank you. In terms of customer relations, the Digital Euro will add a new means of payment, which will offer the possibility for banks to have a new means of frequent customer interaction. And as it will be a legal tender once the relevant legislation is enacted, it can be also function as a trusted anchor for banks to have this point of interactions with their customers. So this also means that good integration will be really important, because it can strengthen the customer loyalty and can establish banks as a trusted partner also for use cases that today happen mainly outside of banks, for example, offline payments and P2P transactions. And the third aspect that we should consider is, of course, infrastructure and operations. So it will not be sufficient, most likely, to simply extend the current solution, but there will be new components that need to be added to fully cater for the requirements posed by the Digital Euro. So, for example, new wallets, API interfaces, and modules to support extended support processes. And in terms of operations, of course, this will also impact banks and payments providers, as they are required to take on new responsibilities and adjust new aspects of monitoring compliance, and consider very strongly data protection and this privacy by design that is like a very high value for the ECB connected to the Digital Euro. So bearing these aspects in mind, we can take a step further and now consider the strategic relevance of decoupling the Digital Euro wallet and the checking account. And on the next slide, we have a picture here, thank you, that shows that it is possible that the wallet and the checking account are not with the same service provider or the same bank. So this really means that an individual customer can have the Digital Euro account with Bank A and their current account connected with Bank B. That makes payments a little complex, of course, but there are processes designed by ECB that will help us to manage this. And however, also with the new Digital Euro wallet, we do not expect the Digital Euro to completely replace the current account infrastructure that is already there. There are different types of payments that are most likely to be used with the Digital Euro, for example, P2P payments and like everyday payments on the point of sale, for example. This makes perfect sense because the Digital Euro is a very good means of payment for small amounts and for offline payments as well. So overall, this means that the wallet will become the main point of interactions for many payments, and the user experience, the service logic, and additional functions have to be integrated to the wallet. Therefore, the checking account remains the financial backbone, but it takes, let's say, a backseat in terms of functionality. And of course, there is a risk of shift in perception and loyalty towards the payment provider who provides the wallet rather than the provider for the checkings account. And of course, it is necessary to consider all of this for the strategic positioning. So each bank needs really to carefully take a strategic decision on how to position themselves towards the digital euro. We can have a closer look at that. Based on all the information, you're probably now wondering where to start with the digital euro. So we have identified 4 key areas of action that I would love to share with you. First, there's the customer interface and positioning. You can ask yourself, how do you want your customer interactions to look like in the future? Where do you want to be visible as a bank or as a payment provider? And how do you want your brand to be perceived in connection with the digital euro? Second, the product and wallet strategy. So do you want your own wallet solution, or would you rather rely on the ECB app for the digital euro that is going to be published? Should you maybe develop a standalone wallet solution for the digital euro, or are you planning to integrate the functionality in your existing, for example, banking or payment app? Then thirdly, the implementation and the network model. So will you develop everything independently on your own, or are you planning to purchase solutions from the market? Are there maybe potential partners with whom you could collaborate on developing solutions, or should you try to outsource as much as possible? So there are different possibilities on how to approach this. And last but not least, also the timing, the governance, and the actions. The question is, when will you start? Will you participate in the pilot, or would you rather wait and observe what happens? Are you ready to start before the legislation and the rulebook are ready? We're still waiting for it, as you might know. Or are you ready to invest now without having the full clarity what will be in the legislation? And also consider what are the consequences and benefits maybe from starting late compared to starting early. And once you have made decisions on all these questions, you will hopefully find it enjoyable engaging with the digital euro project. And assuming that the EU and the ECB will progress further with their plans, the question won't be if it is necessary that the project on a digital euro will be done, but the question rather is how it can be done best to align with overall strategic goals.
Thank you very much. Let's try to answer a few of the questions that we have received. One question was whether the payment institutions licensed under PSD2 will have to be relicensed under PSD3. The answer is twofold, yes or no. What do I mean by no? The existing licenses continue to produce effect. They are not canceled or withdrawn or anything. However, on the other hand, there is a timeline estimated the current wording of the drafts that we're seeing, the most updated, that's like in 24 months, they have to reapply. Okay. And if they do that, they can continue to operate until they received an answer on the reapplication. So this is the concise answer. Another question was, to what extent do we already have in Europe e-money tokens? I will focus on e-money tokens, compliant with both e-money directive and MiCAR. And the answer is yes, we do. I'll just mention a couple. One is backed by Monerium. There is another one that is backed by Circle. Actually, Circle, to my knowledge, issued two e-money tokens compliant with MiCA, one USDC and one a Euro stablecoin. They've done that via licensed e-money institutions in Europe. I mean, Circle is, I think, the second largest issue of stablecoins globally speaking. Interestingly, the largest stablecoin issuer globally, Tether, did not choose to have, for now at least, to have a European MiCA compliant e-money token. And last but not least, there is the one issued by Forge. Forge is an entity part of SocGen Group. And there it's an interesting story in the sense that they designed their stablecoin under some special legislation, I think in France, before MiCA even was in place. And then they basically converted the entity into an e-money institution, licensed under e-money directive. And they've now their token is, both e-money and MiCA compliant European stablecoin. I think there are some questions also on the digital euro.
Yes, thank you. We have received a question regarding the different user types. So if there is any difference between like using the digital euro for personal or for business purposes. And yes, there is. So the ECB makes a difference between different user types. So it's two user types mostly. It's the individual user and the business user. And the most important thing, or there are two very important things. The first one is the individual user is allowed to only have like one digital euro holdings account, and the business user can basically have as many as they like. And the second one is that there will be a holding limit for the individual user. So is a limit on how many digital euro can be on this wallet or this digital euro account. And there's also one for the business user, but for the business user, it would always be 0. So it's not planned that the business user can keep digital euro on their digital euro account.
Another question we received is, how should private banks strategically position themselves in an ecosystem where the digital euro stablecoins and open finance regulations jointly reshape customer interaction, payment flows, and the competitive landscape? I can answer this question from digital euro perspective. This is a quite long question and also a very complex question, and so the answer might be complex. But if we look at the use cases of digital euro as a retail CBDC and stablecoins, which might be used more in interbank settlement, or they have differences regarding the use cases where these kind of payments are used in. But from digital euro perspective, where private banks or banks in general can distinguish themselves from competitors are the value-added services, for example. The ECB, the Euro system, will provide the basic sets of functions. And as I said, there won't be any programmable money. So there are still opportunities for banks coming up with ideas, with use cases for value-added services, and also the way how they integrate the digital euro into their portfolio, into their existing apps, into their existing online banking apps or portals. So there might be cross-selling potential, for example, and other potentials. So this might be the case or the answer maybe regarding the digital euro part, but in general, this is, of course, a very complex topic.
Thank you. Maybe one last question just received. What will be the impact on AML or what's the AML, let's say, impact of the new initiatives about stablecoins and digital euro? That would justify, I would say, a webinar in itself. But in a nutshell, the core idea to be retained is that at European level, the principle is very clear in the sense that adopting one form of digital money versus another should not give you a preferential treatment from AML perspective. Yeah, so the principle is there. How to address that principle for these new types of money, it's a challenging topic, or could be a challenging topic in itself. And as I said, I think it does deserve a separate discussion on the topic. I think we are reaching the end of our conversation, so we cannot continue. Happy to continue the discussions in follow-up for those questions unanswered. We really hope that we managed to open, let's say, the audience interest to what I would call frontier technologies and evolutions when it comes to money and payments. We hope you have enjoyed the full week of the Deloitte Risk and Regulatory Academy of this year, and we look forward to staying in touch and wish you a wonderful weekend because it's very close. Thank you to all the speakers, and goodbye to the audience.
Thank you so much.
Thank you. Bye.
Bye-bye.
Bye-bye.